Hey guys, Dave with Moniology here. Hope everyone is having a great long 3-day weekend here, January 13th through 14th, 2018. And this is our weekend market review. For those of you new to our videos, what we try to do is we look through various different important sectors in the markets based on daily, weekly, and monthly timeframes to give us a better perspective of what's actually taking place, what's happened in the past, and where things are likely going in the future. And I actually look at these charts for the first time as I'm shooting this video, so this is kind of your inside perspective on how I approach market analysis. So let's take a look at what's going on. So starting with a 10-year U.S. Treasury yield on the daily chart, we finally broke out above that 25 print, which is basically the equivalent of 2.5% on the 10-year, and now we're going for 2.6%. We think that once this 2.6% breaks, the next logical target is 3, and we'll look at the weekly to show you why we're confident that we're headed there. But bottom line is RSI is firmly above the 60 level, which is very important, and it's leading price. And so now we think that it's just only a matter of time before 2.6 level breaks. Taking a look at the weekly, this is why we're so confident. So first of all, we broke out here. We've had a very nice consolidation, bullish flag pattern correction. Then boom, we broke out. We were consolidating above an upward sloping middle Bollinger Band, and now we finally broke above the 2.5 area, 2.5. And now we're moving. So eventually, I think we're going to hit this price level about 3.3%, and then ultimately we'll consolidate and see where things go from there. But in the meantime, there's a lot of upside for Treasury yields, and that likely means upside for commodities and downside for the U.S. dollar. Here again on the monthly chart, this is very telling. We're leading in terms of momentum. We're breaking out above the 60 level, so we've got positive divergence where RSI momentum is higher as reflected by RSI here than when we were several percentage points higher in Treasury yield. So anyway, we are very confident in this particular viewpoint, and we think that we've got some upside at the very least towards this 3% level in the coming weeks and months ahead. Taking a look at gold, one of the hottest sectors in the market. We've been very big on this particular play, especially as we broke out above this. First, this kind of was a flush out. Once we broke out above here, this told us that this move was real because it was being led by momentum, and that's very key. We consolidated around this 1300 level, and then boom, we broke out, and now with momentum once again firmly above 70 level, that's very important. I think the next logical price target is 1362, and we might consolidate there a bit, but ultimately I think we break out of that finally and head towards that 1400 area. Taking a look at the weekly chart, so we're breaking above that very important 60 level. This is the downtrend that was broken here that started in the middle of basically 2016. We tested it multiple times, finally broke out, and again, momentum right now is well, you know what? I'll take that back. On a weekly level, momentum is not as strong here right now as it was when price was at 1362. So you want to see momentum really build here a little bit before this move can really head higher towards that 1400 level. In other words, wouldn't be surprised if we saw a little bit of a pullback here based on this kind of negative divergence where momentum here is lower than when price was just a couple points higher. Taking a look at the metals market, gold on the monthly chart, well, here you see why we're so bullish on gold. We think that this is going to break eventually the 1400 mark, that 1380, and it's going to go much higher, and this is going to be the start of a multi-year run in precious metals in our humble opinion. Taking a look at the high yield junk bond ETF, so this one looks like it had a nice run to all-time highs here. And but it looks like it's kind of, that may have been a fake out here because momentum is really decelerating, and we'll see if this is going to be able to hold above the middle Bollinger Band or not. I don't have a really strong view on the high yield at this point. What I've been pointing out for multiple weeks is that you're building many points of negative divergence where price is moving to all-time highs, but momentum is not following. And so we are of the belief that this likely means that at some point in the future, not sure when, this high yield rally ultimately rolls over and heads back towards that 34 level here, which would be which would put quite a bit of shock into the marketplace. But until that happens, it's still in a bullish trend, as you see here, firmly above the 70 level on the monthly RSI. Now here is something I was been pointing out. So we had the MACDs kind of rolling over here, and if they curled below 0, that would be a very ominous sign. But looks like, at least so far, they might be curling back higher, which would suggest that there might be another multi-month run in high yield space. Oil, well, we were one of the first in this space when we challenged the great legend Peter Brandt, saying that we think that oil is going higher, not lower, and I think we were very correct in our view so far, and we see really no reason, at least looking at the daily chart, to suggest why this run is over. We might consolidate a bit, we might pull back towards the middle Bollinger Band, but this move is just in its kind of, I'd say, third or fourth inning here. Here again, momentum is leading price. That's crucial. If we break above the 64 level, hopefully we have a little bit of consolidation. But if we break above that, I mean, there's really no firm resistance before you get into the 80s. So oil might be a huge momentum play in 2018, and here's why. You got this inverse head and shoulders. It was confirmed here so far this month, and a price target of 70 to 80 is certainly reasonable before this rally is over. It's being led by momentum. That's very key and crucial. It's above 60 on the monthly RSI, and there are huge opportunities in the oil space. Taking a look at NASDAQ, we're just going to breeze through these because the equity markets look fantastic, and until proven otherwise, it looks like they just want to move higher, making all-time highs in the Russell. Russell Weekly looks very good. Russell Monthly looks good, and S&P looks fantastic. And look at S&P Weekly. I mean, you can't get more overbought. So eventually this is going to have a massive correction, but if you're a trader, that doesn't bother you. What eventually might happen, you just want to ride the wave. Monthly, look at that. I mean, this is as overbought as this market has been, but that's firmly in bullish territory. Now, dollar is very important, so let's look at the dollar. Dollar's breaking down. I mean, we tried to rally. The MACDs are now firmly rolling over here. We're headed towards $90 just based on this daily chart. We're in this oversold but very crucial bearish territory below 30. You look at the weekly chart, and that's confirmed. I would point out, though, that momentum here so far is higher. We basically double bottomed in price, but momentum is actually higher today than it was just a couple of months ago in August. So a little bit of positive divergence so far, but you've got the weekly MACD scrolling below 0, so it's very possible that momentum will continue to decelerate, and dollar I think it's very likely that the dollar heads lower towards in the mid 80s. And here you see on the monthly basis, there's actually it's being led by negative momentum. So the weekly negative divergence is probably, or positive divergence, probably something just to ignore. Ultimately, 87.50 is our first major price target, and we called that when we were at 103, when a lot of these quote-unquote experts were calling 120. So wouldn't be surprised to see 87.5 might go to 80. We'll see what happens around this level. We'll revisit that, and eventually we think we will go to 120, but there might be some multi-year period consolidation before that move does actually occur. Finally, taking a look at two more important indices, the volatility. Let's look at it from a weekly time frame. We still think it's coiling and eventually will break higher in a very, very big way, but for the time being, there's nothing really to see here. And this is the one important point on the VIX monthly. The monthly MACDs are starting to curl above 0. If this breaks above 0, then the technical traders will very likely rally this price, and that can create some very, very strong volatility in the marketplace. So stay tuned here, and just based on looks of things, it could be, I would say, maybe February to March area where this could really take over the markets. But looking at the MSWORLD, I mean, look at this huge huge up move, and we're breaking to all-time highs. Our price target right now is 2,400 in this particular space. So a lot of upside here in the markets, especially equities, commodities, and oil. We really like what we're seeing in those particular sectors, and so there are very, very great opportunities. I appreciate you guys watching. Good luck with trading. Have a great week, and enjoy the rest of your weekend.